Roger Bootle has worked in and around the financial markets more than 30 years now. During that time, he's been chief economist at HSBC and advisor to the UK Treasury, and he's managing director at Capital Economics now. Joins me in the studio. Thanks so much for coming in. So I guess the BOE's task is getting tougher because the UK may not be in recession, but growth is very weak.
Yeah, I think the economy is really very weak. In many ways, this has actually played into Mervyn King's hand. And if the numbers recently hadn't been soft, I think he'd have had a real battle on his hands because, of course, the inflation numbers, as you say, are bad and they may well get worse. But I think now, myself, that the economy is showing such signs of weakness, it would be quite difficult for the other members of the MPC, I think, to think about pushing up rates.
But with inflation double the government's target at 4%, how much longer can he hold off on raising rates?
Well, certainly not indefinitely. I mean, if we're stuck at these sorts of levels, never mind 5%, for a couple of years, then I think the case will wear really very thin indeed. In fact, inflation's got to start to come down, I think, at the beginning of next year, which lots of commentators, myself included, are fairly confident that it will.
It will come down.
It will. I think it will. It may not, but I think it will. But if that doesn't happen, if we're stuck at these high levels, then I think King won't be able to stand there simply and say it's going to happen next year.
In which case he could raise rates before 2030?
Oh, absolutely. Yeah. Of course, yes. I mean, if the inflation data and or the real economy data proves very different from what I'm suggesting I think it's likely to do, then yes, of course, he could raise rates.
But you essentially stand by your central forecast, which is that rates will remain on hold throughout this year and the next, if the data continues to be as poor as it has been recently.
Yes, I said 2 years ago that I thought UK official interest rates would be at this level for about 5 years. So we've got just under 3 years to go.
Could the MPC then actually consider giving more support to the economy?
Well, of course, it could consider extending QE. Now, I think it's unlikely to do that while the inflation numbers are so high. I think there is a credibility, confidence issue about that. But if we move into next year and the economy is very weak and then inflation is falling quite sharply, I think it's quite likely that it will
That would be a
QE.
remarkable sort of turnaround, wouldn't it?
These things happen.
Yeah. So we could see additional bond purchases or asset purchases
I think so. Yes.
next year, possibly.
Yes.
Now, it's not just the BOE, of course, we're watching today. ECB speaking out as well. What do you think we might get from Jean-Claude Trichet in terms of indications as to how aggressively he's going to tighten monetary policy, how many more rate hikes we might see this year?
Well, I'm not sure about this, but my suspicion is that we're going to see at least one more rate hike. Now, I'd be surprised, frankly, if it would go much beyond that. The markets are expecting, of course, a whole series of rate hikes. That would, I think, be extremely dangerous because there are now beginning to be signs that the Eurozone is suffering. The German economy, which has been a real motor, if you look at what's happened to German exports recently, they seem to have just about topped out. And in the peripheral economies, the weaker economies, things look pretty grim. So I don't think a further rate rise is justified at all. And I would hope and expect that after one more rise, even the ECB would see sense and stop.
So from what you're saying, you would be particularly concerned about further rate hikes in the Eurozone really hurting those vulnerable Eurozone economies, but then also potentially hurting Germany to an extent.
Yes, I would be concerned about them hurting the economy overall, and so far Germany looks very strong, but I think that's going to come to an end fairly soon, that the German exports aren't going to surge ahead. It looks as though the world economy may even be slowing a bit, which will of course slow German exports, and I don't think we're going to see a consumer takeoff in Germany either.
When you say the world economy is slowing, could we see a double dip? What are the prospects?
Well, I think this word double dip is frankly vastly overused. I doubt whether we'll fall back into a recession pure and simple, but I think we could well have a growth slowdown.
And meanwhile, we have the Fed singing a very different tune, saying, you know what, rates are going to remain low for an extended period.
Well, I think the Fed is effectively in the same sort of boat as the Bank of England, and rightly so. The two economies are actually quite similar. The outlier here is undoubtedly the ECB.
Okay, well, Roger Bootle, thank you very much indeed. Great to get your thoughts, your analysis.